Hi, my name is Ravi. Welcome to my channel, Payment Talks.
It's been a while. I know I have been off YouTube for some time, partly due to work, partly due to life, and maybe just a bit of laziness. But we are back, and I'm really excited to restart Payment Talks with a fresh video that goes back to the basics yet covers some of the most powerful concepts in the payments world. To kick things off, we are diving into one of the most fundamental and often misunderstood topics in banking, the payment transaction life cycle. Think about it. Every time you send money or make an online payment, there's an entire chain of systems, validations, and settlements happening in the background. But what really happens behind that simple payment successful message? Understanding the payment life cycle helps you see how money truly moves. It's what powers banking, fintech, and cross border payments across the globe. In this video, we'll go step by step through the five major stages of payment. In fact, four, but let's see what these five stages are: payment initiation, payment processing, clearing and settlement, reconciliation and reporting, exception handling, and investigation. Every banking payment can be analyzed in these stages. Each stage is crucial, and together they form the heartbeat of the entire payment ecosystem. Please look at the arrow marks in the background. These arrow marks represent the direction of these processes in the payment. Let us understand each stage in detail with all the information you need to have a sound clarity of payment life cycle. I want to cover the payment lifecycle in detail so that everyone who watches this video has a clear understanding of where they are working in payments. That's why we have split this video into two to cover every aspect detailedly. In this whole video, please note one thing clearly in mind. In this complex payment world, each bank has its own way of workings. Each bank may use different language to describe things. In this video, we try to cover the most widely used language and processes to make sure you understand the payment concepts. If you see any differences and any particular way the banks you work operate, then please do comment so that everyone can learn, including myself. Before we move to each stage, let's look at this picture. Do you remember this picture? This is a basic payment scenario on which we started our payment talks journey. Let's recap what this is. For any payment to happen, there should be a payer, person or entity that has to initiate money movement. This money is in their account that is held in a bank. This bank has to process the money to the beneficiary who has an account in another bank. As we discussed in the first video, these two banks interact with each other in different ways. And based on the location they are present, the payment might be a domestic or a cross-border payment. Irrespective of the payment type, the fundamentals remain same. Now, based on who the payer is, there are different ways to start the money movement, which is what we call as payment initiation stage. If the payer is an individual, he or she has multiple options to initiate the payment. They can log in into the mobile app that is provided by the bank. They can log in into net banking in any internet browser. Please note, for us, either logging in mobile app or internet browser seems to be same, but there are different ways for the bank. You can as well go to the bank and ask the bank person to transfer money. Even today, some of our parents still use this method, especially when transferring large amounts. When we withdraw the amount from ATM machine, it is also a payment where the initiator and beneficiary is the same person. Some of us would have definitely called customer care to do some kind of transaction on our behalf. Now, please note, in all these scenarios, an individual is trying to initiate a payment from their account. Now, these are called retail payments. And all these different methods that these individuals can initiate a payment are called retail channels. A channel is a way to initiate a payment. If an individual does a payment, then it is called retail payment. Then what are other kinds of payments? Typically, banks divide their customers into two main segments, retail and corporate. Some banks do more segmentation based on their convenience, like SMEs, private HNIs, etc. At the end of the day, all these are customer payments. Banks differentiate their customers so that they can give specific attention to their customer needs to attract them from competition and do more business. The more customers do business with bank, the more money the bank makes. Simple, right? Now, coming to the other customer type that we mentioned, corporate. These customers are typically organizations. They have large infrastructures and need to do many payments at once. Just take an example of a large organization which is trying to do salary payments, vendor payments, etc. Now, they cannot initiate these payments one by one via mobile channel or from internet banking, right? So these organizations maintain their information in systems where they can initiate these payments at once using maybe an Excel sheet, XML file, or any specific format that is mutually agreed with the bank, or even direct integration of the ERP systems with bank systems. Several methods like host to host connections using SFTP or APIs, direct file uploads into bank provided channels, etc. Typically, these methods of initiating the payments are called corporate channels. Corporates can also use retail channels for specific one-off use cases. But retail customers typically do not use corporate channels as they do not have the infrastructure needed. The point I'm trying to highlight here is that these different ways of classification is all for convenience of the banks, and nothing is hard and fast rule. With the evolution of the payment domain, there are alternative methods that are possible to do a payment. Some of them are called card payments, direct debits, instant payments like UPI, etc. We will cover each of these alternative payment methods flows separately in future videos. Fundamentally, they do have the same 5 stages of payment lifecycle, but they have some specific nuances which we should address, and that's why we cover those nuances in them later. For now, we focus on the most generic banking transaction. Now that we understand the ways in which a payment can be initiated via a channel, let us understand what happens on these channels while payment initiation. Who and how can one initiate a transaction? After all, just imagine if I can just initiate a payment from your account into my account just like that. There have to be validations that will take place during initiation. That's why banks have many different levels of validations while initiation. These validations will depend on the channels that are being used. Based on the channel, the validations might be different. If we consider the retail segment, the fundamental authentication is your login. Because of the many frauds and scams or data breaches that are happening, industry have come up with two-factor authentications like OTPs, biometrics on mobile apps, third-party authenticator apps, etc. Similarly, for corporate segments, there will be validations. In fact, for corporate segments, we might need extra layer because of their volume and value of transactions. As they have dedicated infrastructure for payment initiations, they might have specific workflows defined which need multi-signatory checks like maker checker process, etc., along with the technological security measures like encryption, tokens, etc. Once it is established that correct person or entity is initiating a transaction, there are preliminary checks that happen on these channels. First, to check is the data that is provided by the customer is sufficient to complete the transaction. As we understand by now, the fundamental information required for a transaction are sender, sender's bank and the sender's account, receiver, receiver's bank and receiver's account, and the amount of money that needs to be transferred. These are basic elements that are needed to complete a transaction. But based on the scenario, bank expects customer to provide additional information like when do customer wants payment to be done, that is value date, why they want to do the payment, that is purpose of payment, and if the payment is a cross border payment, then in what currency customer wants to send, who will bear the charges if any, that is charge code, etc. are needed on top of the basic payment details. The point we need to understand is that the additional information required depends on the payment scenario and the regulations of the bank. They differ from bank to bank and scenario to scenario. Just understand that bank channels will have these checks inbuilt in the channel initiation process. If any information required is not provided by the customer, then usually the channel will prevent the payment initiation itself. Like for retail channels, you will not have submit button enabled on the mobile or browser. And for corporate channels, usually system will understand the different error scenarios and provide relevant error codes back to the channel. Sometimes data elements are expected to be in certain format like IFSC code format, IBAN format, etc. Channels also does this validation. Channels should also be interactive, like showing availability of funds, especially for retail channels, where when you select the account, the balance is displayed, and if you try to transfer the funds from a low balance account, the transactions will not be allowed to initiate. In some situations like cross-border payments, the FX charges or fees applied will be upfront visible to the customers. Finally, what we need to understand is that channels, whether it's online, mobile apps or browsers, or offline, bank branches, or corporate channels, play a crucial role in the payments. Channels are the interaction points for customers and banks. The customer journey on channels, online or offline, retail or corporate, defines the satisfaction levels of customer experience with the bank. Each bank tries in their own way to provide a smooth, hassle-free, comfortable experience to customers. So, banks have dedicated teams just for channels. In fact, some may have dedicated team for each channel to make customer experience pleasant. If you are working in this area of the payments, please understand the importance of your work, but there is lot more to payments which we will cover now. Once the payment initiation is completed, the channels send the payment instructions to the payment engine. These payment instructions are sent to payment engine through channel integrations like API, MQ messages, SFTP, ISO messages, or any other way. Now that we understand the first stage of the payment lifecycle, let's move on to the next stage, which is payment processing. This stage is the meat of the bank side work. This stage is typically decomposed into several sub-steps. As you can see here, there are several steps involved in this stage. Please keep in mind, each bank will have a definitive process flow where these steps are configured to be processed in certain order. There are several steps, some very specific according to bank's convenience, but mainly they can be categorized as shown. Validation and enrichment, routing, authorization and workflow, pricing and effects, accounting, which is crucial step, and then message transformation into output format and to the next step of the payment lifecycle. Let us now look at each step in detail to understand more about a bank's payment processing. This step of payment processing can be categorized into two phases. One, payment pre-processing and payment execution. Pre-processing refers to all the validation, enrichment and compliance checks that a payment instruction undergoes before it is accepted by the payment processing engine for routing and settlement. Think of it as a quality check or readiness gate that every payment must pass. Let's see what exactly happens in pre-processing before we understand with an example. One aspect is validation of the data that has come from customer during the payment initiation. During initiation, the data validations check mainly focus on are the details enough. But here the data validations happen on are the details correct. Then we have account status check like whether the account is dormant or whether it has necessary currency permissions, necessary funds for an FX transaction, or the Benny Bank details entered correct, etc. Then there are validations like transaction limits. Various checks happen like when you add a new beneficiary, you are not allowed to transact within 24 hours. Or even if you are allowed, it would be restricted to certain amount, etc. All these checks happen in this phase. There will be some validations which payment engine generally outsources. Yes, outsources to peripheral systems. These can be mainly sanctions check, fraud check, liquidity check, sometimes even FX and charges calculations. These are done by specific specialized applications which a bank typically integrates with. Let's understand two most common interfaces, sanctions and fraud. They both seem to be same, but there is a difference. What is the difference between these two? Sanctions check ensures the bank or payment processor complies with international and local regulations by not dealing with prohibitive individuals, entities, or countries. It protects the institution from regulatory, legal, and reputational risk. External credit bureaus or central banks maintain the watch lists of sanctioned persons, countries, banks, etc. Whereas fraud control aims to prevent unauthorized or deceptive activities, usually committed by individuals or entities trying to steal money or manipulate payment systems. It protects the banks and customers from financial loss. To understand in a crude way, sanctions looks external threats, fraud looks internal threats. In some banks, a single system can do both the activities at once. The next aspect of the pre-processing is the enrichments. Here, depending on the scenario, many enrichments happen to the payment message. When we initiated a payment, we never gave neither our details nor our bank details. But these details are mandatory to be sent to other banks. Enrichments take care of these things. Your KYC records all your details and each payment done by you gets the information from there. Whenever you add a beneficiary, you store all the required data used in payment. So when you select the beneficiary, all the details are fetched from there. You just give bank code, IFSC or SWIFT or SORT, any code. During processing, bank gets the full details using the reference data that they might internally have or from external sources. You might select purpose of a payment as personal or commission or anything on UI. But standard messages need codes. So codes like these gets enriched. Similarly, there will be many other details which may be enriched during this stage. The next level of enrichment is the settlement chain, which also includes correspondent chain formation. Based on the beneficiary bank details, some banks have rules like SSIs, standard settlement instructions. What are these? For example, bank A has to send a payment to some bank in another country B. Bank may have a rule that any payment to that country, irrespective of the beneficiary, will have to be routed to their correspondent in that country B. These details will be enriched into the payment details. These validations and enrichments are generally termed as pre-processing steps. If any of these validations or enrichments are failed and payment engine decides that it cannot take the particular payment further, then it will raise an alert so that some manual intervention is needed to clear that payment. Let's take an example for corporate scenario. Let's say a corporate client uploads a file with 500 outgoing payments in various currencies. During pre-processing, the system will validate each record's mandatory fields like account numbers, amounts, reject any invalid or duplicate transactions, screen all beneficiaries against sanction lists, fetch exchange rates for cross currency payments, confirm sufficient balance in the funding account. Only after all these steps will it send the approved transactions to the processing engine for routing. Unapproved transactions will be kept in a different queue for operations team to work on. Again, this method varies from bank to bank, as some banks want to reject the full file even if one transaction is not valid in the whole file. We shall discuss non-STP steps later in this video. From payment pre-processing, let's move on to the payment execution phase. One of the important steps in the payment execution phase is the routing of the payment for settlement. What is routing? Routing is a process where a payment engine tries to find the optimal path for the payment so that funds are received by the beneficiary. To determine the optimal path, many factors will be taken into consideration. Let's see one by one and understand a little. First, payment scheme availability. For example, based on currency, an INR domestic payment can be routed via any of the available schemes of IMPS, NEFT or RTGS. But again, out of these, based on the value of transaction, let's say 10 lakhs, then we cannot use IMPS. Similarly, based on parameters like currency, amount, etc., some schemes are eligible and some schemes are not. This is the decision that payment engine takes based on the rules or logic defined by the bank. Next important parameters will be cutoff time. Cutoff times exist at multiple levels. Sending bank, clearing system, correspondent bank and receive bank, each possibly having its own deadlines. In routing, when a payment is sent across different systems, SWIFT, SEPA, RTGS, local ACH, etc., or different time zones, each hop in the route has its own processing window. If routing doesn't account for cutoff times, payments can get delayed, miss SLAs, or sometimes fail settlement. If the payment arrives after the cutoff time, it will typically be processed on the next business day, often with a different value date. Routing logic dynamically decides whether to use a direct route, a correspondent route, or queue for the next day. Routing engines must constantly check cutoff calendars, system-wise and currency-wise, to ensure on-time delivery and compliance with service commitments. Next decision parameter is cost versus speed. Taking the domestic INR payment example, if the payment is urgent, then payment has to be settled instantly via RTGS, even if the transaction may cost RTGS charges. But if the payment is not so urgent, payment can be routed via ACH, NEFT using deferred settlement. Next decision parameter typically used in the cross-border payments is the correspondent banking chain. Bank can maintain multiple correspondents for same currency. Based on the agreements between them, routing logic needs to decide which correspondent to be used for which scenario. Also, bank rules should consider the point that when they have to add correspondents into the chain, they should make sure that minimum number of correspondents are added. Otherwise, each correspondent may charge some fees, and that fees will either be borne by the bank or given back to the customer. leading to expensive transfers. The next parameter is network rules and compliance. Network rules are operational, technical, and procedural rules defined by payment networks like SEPA, SWIFT, FedNow, etc. Payments should contain the information which are mandated by networks. Otherwise, the payments will not be able to route to those networks. Example, IBAN is mandatory for SEPA, even though account number and bank code are sufficient to identify a beneficiary account. Either this info should be enriched or this payment will be rejected by network. So routing has to take care of these rules as well. Apart from discussed main parameters, banks can add their own parameters based on local laws or banks' operational procedures. Please look into the CPD DPD video series that we have already covered to understand more on the routing of an ISO message. Next thing in the payment execution is the authorization and the workflow itself. Not all banks have the same processing flow. For example, some banks do sanctions check first even before enrichment of the payment. Some banks do the sanctions check during processing or even at the last. Some bank does this check twice, once at the start of the flow and next at the end of the flow. Some banks have specific requirements like threshold limit. Any payment above certain limit have to be flagged for manual intervention. Have you encountered a scenario where anytime you did a particularly large transaction, then you will receive a call or SMS from bank asking for the confirmation whether you have really done that? This is part of payment processing. Some banks apply these kinds of thresholds for a particular segment of customers or based on their previous transaction history. Also, the transaction flow defines which team to be alerted based on the issue encountered. For example, if sanctions hits happen, then sanctions team is alerted. If funds insufficient happen, then liquidity or treasury team is alerted. And for normal issues, operation team is alerted. And when these teams take any manual actions on the payment, then multi-levels of approvals are needed based on the severity of the issue. One of the important steps in processing is the fees and effects calculation. Based on the payment scenario, different fees and FX rates are applied. For cross-border payments, we have already covered the hour bend charge codes in one of our previous videos. Please look at that video for more clarity. These charges are generally shown to the customer upfront in the channels for better customer experience. FX conversion is a huge topic in itself. We shall cover this topic in detail in our future videos. Next important decisive step is the accounting. This step indicates the movement of funds. In our next video, we are going to cover the accounting entries and its double entry bookkeeping principle along with many other aspects in detail. We shall also cover the most commonly used accounts for bookkeeping in the bank. Once the entries are made, then the movement of money is final. If there is any issue, then bank has to either reverse these entries or make new entries against these. The last crucial step of this phase is the message transformation. Let's understand one important thing in payment processing. As we just discussed, every network has its own rules to have a specific data for it to process and settle any payment. Previously, we had multiple message formats like Fedwire, FIAM format, Swift MT, Indian specific format. For a payment engine to process these messages without internal format of its own, then it will have separate processing flows for each message. This is not practical to maintain by any bank. Adoption of ISO 20022 has made the format common, but still in the usage, the networks have specific nuances. Most of the payment processing engines has an internal format where that information is stored. This internal format is what payment engine users usually rely on the processing. Even the UI screens of the payment engines are made based on these internal formats. The external message formats, whatever format it is, they are first converted into this internal format, then processed, and then they will be converted back into the desired external format. In message transformation, the processed payment is converted to the required external format, Swift network or local clearing or any other. If all the steps are processed without any issue, then the payment is sent out as STP, straight through processing. Few networks have additional steps like Swift GPI, where bank has to inform the centralized tracker based on the scenario. If cutoffs are breached, then payments are queued for the next day processing. Most of the banks want the payments to be STP. If they are not, then banks will have manual overhead of clearing these payments one by one. This involves a lot of effort and also cost, and it will even impact the customer experience. With this, we come to the end of the first part of the payment lifecycle process. In the next video, we shall cover the remaining of the payment lifecycle.
Thanks for watching this video. If you like this video, please like, subscribe and share for more such interesting topics on payments.